What's up, everybody? Today we have three people other than John. Okay. So, as you already know, my name is LeBright. Okay. My real name is Peter Brightly Joseph. Okay. But people started to call me LeBright because I was a super fan of LeBron James. Was just calling me LeBright, and I kept the name. Okay. So I'm from Haiti and currently living in the US the last 4 or 5 years. Okay. I came here for study purposes, um, especially at Broward College. So I had to leave after 1 year or something because that was not for me, I guess. And yeah, so I discovered trading in 2020 before the pandemic. Before the pandemic, it was February, close to my birthday, and I started to learn about trading. Um, I think it was a friend of mine that he used to post charts, and I was interested, and I said, okay, what is this? What is that? And he talked to me about trading. He talked to me about the company. It was in that's in this company I met John Fibonacci. Okay. And yeah, so we started learning together in 2020. But to be honest, the first 2 years, um, we were not doing any progression because the environment we were in was very toxic, to be honest. And people were most likely talking about ranks and other stuff, okay, the MLM, everything, but not trading. But I wanted to learn trading. So I kept I kept studying, and I had a lot of educators. I watched a lot of educators in French, in Spanish, sometimes in English because I understand Spanish, even though I can't speak, but I understand it. I speak French, so I used to watch French educators, and I used to watch also English educators, especially traders from Trade House, Mike Navarrete, Mike Miles, especially Mike Miles and Jordan, Zach, a lot of educators from Trade House, and I've met John Fibonacci through these calls. I thought the name was the power hour and around 3 p.m. something like that. And John Fibonacci used to be a guest, okay? He used to be a guest just sharing his thought on E-mini and S&P. But the way he used to do it was, I mean, it caught my attention better than other educators. I'm not saying they were doing it in a bad way, but I think John Fibonacci was this educator that just share one thing and you understand everything. So and I started to learn from John Fibonacci, let's say 2 years ago, and I was very focused and started to learn everything about divergence and IC candle and everything. But to be honest, most of the things that John Fibonacci has taught me, I knew something about them. Not everything, but I knew a little things because I was here and there on YouTube, on social media, and everything. But only one thing that I can say John Fibonacci has taught me for the very first time, that was the relative strength analysis. And it was the first one. I used to be on Twitter, on YouTube, everywhere. Nobody used to talk about relative strength analysis, divergence. Today, people call it SMT and everything. But that was the first time I've heard about divergence. That was John Fibonacci. But the thing that John Fibonacci helped me to do, it was how to put all of the things together. Okay, because I knew a lot of things. I watched a lot of educators. I knew a bunch of concepts, but I couldn't put them together. Okay, that's why even though I watch a lot of educators, I always give credit to John Fibonacci because what was the importance? What's the purpose of having a bunch of concepts and you don't know how to put them together? So John Fibonacci helped me in that, and yeah, so I start making progress. Let's say last year I see real progress in my trading because I started watching John Fibonacci on 2022. Okay, it was on April 2022, and since then. I stay consistent. I'm consistent. I'm a consistent trader just for 2 years, even though I have 4 years in the field. But I can say the first 2 years I was in the trading. I was in trading. I was doing everything but not trading, And yeah, I start to see progress and everything. And John Fibonacci, my mentor, we now we are closer than we used to in 2022. Okay. And finally we decided to start doing stream on the Discord app. We had this discussion last year. Um, that would be a good idea for me to share my thought on the Discord app, stream on the Discord. But I told them to give me some times, and as soon as I'm ready, I will let them know. And as soon as I'm ready, I said, okay, I'm ready to go on Discord and stream with you guys. But how we're gonna do it? Um, we're not gonna have a stream like an educator talking and you are the student, because I'm a student too and always a student, and I'm gonna stay a student forever. Okay. We're gonna do it like a trading pods. Okay. It's like few friends together talking about one subject, sharing their idea, go over their stops, go over their profit, their trade and everything. Because I have some trading partners and I see how we make progress just by doing calls all together and sharing our ideas every Sunday, every Saturday, every day now. Okay. And I think that would be a good idea for the SMS community, because I have some people in the SMS community that used to text me on Discord asking me question everything, and I said that would be better to just go stream and share my idea, share my thought and everything. So today's it's like a test stream, like I can say, okay, to see if everything works together. I'm talking about myself a little bit of a background, and you can ask question, of course, okay? And if we have times, I can go deeper into um my trading strategy, okay? Because one thing I've realized, even though we have a lot of concept in the SMS community, a lot of concept, okay? John Fibonacci gave a lot of things for free for the community, but I think just we are different people, different personality and different way of doing things. We're gonna have one or two concepts that match ourselves. Um, how to explain that? You're gonna find two, at least one or two concepts that you really think that's your concept, okay? And I will go over that because even though I understand a lot of concept that John Fibonacci has taught, but I can say I trade only one or two concepts, and they give opportunity almost every day. I mean, all of the concepts give opportunity almost every day. We know Nasdaq and ES and Dow Jones, they are very volatile. Okay, so we will go over that. So I don't know for now if you have a question, and even about me or my journey, anything. Um, there is a chat. I don't know if you know that. The live stream, we have an open chat. You can click on open chat. Oh, okay. We have John that said what's up. So yeah. Yeah, you can post your question here. So okay. Today we're gonna, I don't know, I don't see questions. I don't know if you're typing. Waiting.
If you guys want to type your questions into the chat, if you can't find it under the like right where it says live stream, there's some buttons over to the right. There's open chat, create invite, or like edit the channel. That text box, you can open the chat, and then that's the chat for the live stream. So that's where you can ask your questions. So I just posted a message that said you can ask your questions here if you have them, and there you go.
All right. So Today we're gonna okay, I'm gonna start with my the way I trade. It's not difficult. It's simple, it's easy. It's just two, three things. Okay. Just like John Fibonacci used to say, you don't have to complicate your trading. Okay. Just keep it simple. We're gonna go over what I'm looking for in the market. Um I open my chart, even it's Nasdaq or ES. What I'm looking for is first thing first is liquidity. Okay. As you already know, liquidity runs the way liquidity is what you have to understand. If you can't find the liquidity, you are the liquidity. Now, I'm gonna pay attention to different, I can say different types of liquidity. First thing first, we're going to liquidity based on structure. Okay, what we call low resistance low and low resistance high. It's when we have a low or like that, okay, and the market comes close to it and create low resistance low. I don't know if you're watching Mark Douglas, but I have a lot of videos of Mark Douglas explaining this stuff, and this is very powerful. Okay, this is very powerful, and it's simple. It's simple to see in the market. It's simple to draw the line, but the how to say that but Mark Douglas go very deep into this structure, this type of movement in the market, and explain it very in a good way. And once you watch Mark Douglas explaining this stuff, and I think you're gonna understand low resistance low and low resistance high better. Okay. When we have this type of movement, we're gonna have this low, we're gonna call low resistance low. That's what I'm looking for in the market. Low resistance low and low resistance high. That's the first things I'm trying to find when I open my chart. Okay. And secondly, we're gonna have low daily, low weekly, low monthly, low session. Okay. I think you already know what low weekly means. Low monthly means the previous monthly low, previous monthly high, previous weekly low, previous weekly high, and also the session. Now in the session, we're gonna have I have a different way to do it. Okay, because I consider Asia, even though I know John Fibonacci he doesn't talk about Asia. He consider all of them as London. Okay, that's good. But I'm gonna have the Asian session. Okay, how I consider it. So as soon as the market open, from the time the market opens until 3, I consider any low and high as my Asian low and Asian high. Okay, that's gonna be my Asian low and Asian high. So that's how I consider it every day. So after that, we're gonna have the London. Okay, um, the London session I consider from 3 in the morning Eastern time until 8. Even though the London session is not finished at 8, but why I consider this only this area is because at 8 we're gonna have the open of the New York session, not the New York Stock Exchange, but the New York session. So as soon as I have the open of the New York session, I'm just gonna consider this space for London session. And after that, what I'm gonna call pre-market low, pre-market high, it's what John Fibonacci called now the data low, the data high. I have it every day. Even though we have news on that, I'm still gonna have my pre-market low and I'm gonna have my pre-market high. I have it like that for a while. Okay. So um I think John Fibonacci talk about this not he doesn't like talk a lot about it, but he said something about pre-market low and pre-market high. Even though we don't have news, but we still I still consider the pre-market low and pre-market high. And after that, that's gonna be the open of the New York Stock Exchange. So Asian session from 6 p.m. Eastern time to 3, London session from 3 to 8. I'm gonna consider any low and high, okay, in this area as London low, London high, and pre-market low, pre-market high. Okay. Some people trade the pre-market. I don't trade pre-market. I only trade the New York Stock Exchange and especially the morning session. Okay. So now what's gonna happen? You're gonna have a market that's gonna create liquidity. Okay, the first liquidity that I talk about. Okay, you're gonna have a market that's gonna create liquidity during the Asian session. Okay, and sometimes in London, the market might reverse sometimes. Okay, take the Asian low. Okay, reverse and create liquidity. Okay, to go higher. And the pre-market most of the time gonna continue to do what London has done. Okay, and now the New York Stock Exchange at 9:30 Eastern time. So I'm gonna have all of this as liquidity. Okay, and especially I'm gonna have the low of the pre-market. Okay, the low of London gonna be like that, and the low of the pre-market gonna be like that. Okay, now we're gonna have low resistance low, we're gonna have low resistance high, a bunch of stuff. But I'm waiting, I'm waiting for market to come to this low to manipulate this low. And every single day the market, I'm not gonna say every single day, but the repetition is insane. Okay, the market will come to the pre-market low, the London low, or the previous day low to manipulate. Okay, so that's where I'm gonna take my entry. Now we might have something like that as a low resistance low, but if market comes there and react like that, I'm not gonna trust I'm not gonna trust this low. I'm gonna trust it is when it take the pre-market low or take the London low. That's why sometimes you take trade and I said, okay, I'm gonna sit on my hands because that's not my setup. That's not what I want to see a lot of the times. Okay. And sometimes we're gonna take a trade and got stop out, and after that the market gonna do the real movement. Is because that was not the pre-market low. That was a low resistance low, but that was not the pre-market low. So the pre-market low was there. Or the market might keep dropping lower and go to the London low. That's how I trade every day. It's literally simple. Okay. So now, when I have my area, let's say I have my pre-market low and things like that, I have to have a target. So what's gonna be my target most of the time? That's gonna be my low resistance high. Let's say if we are in the buy scenario, I wanna have something at the top. So I wanna have a low resistance high we have from maybe yesterday price action or last week price action. I have to have something. If I don't have anything to reach for, I'm not gonna take the trade because that's gonna look like gambling. Okay. So now what's gonna happen sometimes, and when the market is very volatile, we're gonna have buy and sell scenario. Let's say we're gonna have the market that reach the pre-market high, for example, and give opportunity and drop, okay, to the pre-market low, okay, and give opportunity. So while the market doing this movement, what's gonna happen? It's gonna create low resistance low. So it's gonna create low resistance high, okay? It's gonna do that and go higher and reach for liquidity. That's how the market is doing like 24/7, reaching for liquidity. The market move from liquidity to liquidity and imbalance to imbalances. So why I'm talking about imbalance, that's the second tool I'm gonna use to trust my liquidity grab. So below this low, below the pre-market low or below the London session low, I'm going to looking for an imbalance in 1 hour, most of the time 1 hour and 15 minutes. That's just the time frame I use, 1 hour and 15 minutes. M5 sometimes, but now I just as soon as I have everything I have, the market comes to my area, I jump to the 1 minute time frame. M5 is about it's more likely to manage my position. After taking the position, I'm watching the market in M5 to see how price react to certain area and to know if I have to, let's say, close the position, close the trade, or let it run, or do partial and stuff like that. So I use M5 just to do that, but most likely my trade gonna be in M1. So like I said, in M15 or H1, I have to have something there. So, and that's it's not gonna be hard to find. Okay, the market gonna leave an imbalance below this low. The market gonna leave an imbalance below this low. So I don't know if the market gonna react in this low or in this low, but the imbalance will tell me, because we know when the market is going to respect an imbalance. Um so when I open my trading view and I have all of my zone, I have the liquidity area and I have my zone, I have my imbalance. I don't say I want market to manipulate here. No, I just say that, okay, I have two zones. I'm waiting for market to tell me which area it might manipulate, because sometimes the market might come here and it's not gonna manipulate there and keep going lower and do the manipulation right there. Okay, so so now some people are gonna try to catch this movement and they got out stop loss, while the real manipulation is going to happen there in the London low. So I'm very picky on my trading style. And I want to see what I want to see. So if I don't see it, I don't take trade. Okay, and I know my opportunities will come. So the concept that John Fibonacci has taught to us, they're gonna happen in the market over and over and over and over again. If I miss a trade, I know I'm gonna have a next opportunity. Or if the market doesn't give me opportunity, I know it will come. Maybe not now, but it will come. So I'm gonna stay very patient. Now, my third tool I use to take a trade, because it's just three. I can say three, four, but it's kind of three. My third tool is gonna be up candle and down candle. So John Fibonacci has this concept in his book, and even him, he doesn't talk about it enough, but this concept is very powerful. This concept is very, very powerful. In the up market, like he used to say, in the up in a bullish market, um down candle should be respected, and in the down market, up candle should be respected. So most of the time, what's gonna happen? I'm gonna have a down candle right there. So when I have all three together, so I think people call them supply and demand. They give a lot of names, but names don't matter. Context does. Okay, because I'm not gonna try to find every up and down candle after expansion. I'm just gonna keep my focus on down candle, for example, that that is in alignment with my liquidity that I expect to be manipulated, the manipulation area, my imbalance. So when I have three all together like that, that give me more confidence. So what's gonna happen? So the New York Stock Exchange, the market will come and manipulate all of the imbalance, the low, the pre-market low, and the down candle. um, so as soon as the market react, I'm gonna trust this trade. I'm gonna take this trade no matter what. I don't care, because I have all of my variables there. I'm gonna take the trade without hesitation. If I hesitate on a trade, I can just say it's because maybe I didn't have an imbalance. If I have just a low like that and I don't have an imbalance, that will bring hesitation, and that's why I'm trying to take position. I'm trying to only take trade that give me all of the things all together. Okay, so that's the third tool, but I can say sometimes the third tool will be relative strength analysis. Okay, because what's gonna happen? Sometimes the market will come to the pre-market low in Nasdaq, and let's say in ES we won't have something like that. You're gonna see something like that. So if it's happened below my pre-market low, for example, and ES didn't take the pre-market low, so it created a divergence like that. So I'm gonna take the trade. So yeah, sometimes I'm not gonna have the down candle. Even I prefer when I have the down candle, and that's the only difference in my trade. Sometimes I will have the down candle, sometimes I won't have the down candle. But if I don't have it, you can be assured that I take the trade based on divergence. Okay. Just three concept. These three concept give me opportunity every day, almost every day. I can say there is a big difference between analyze a market and execute a trade. There is a huge difference. So I might say sometimes I have execution problems, but in terms of having opportunities, I have opportunities almost every day just by using these three concepts. So yes, John Fibonacci has taught a lot of concept. Let's say, um, the one of the concept I like a lot is the ETF, checking the ETF. That's a nice concept, and I like it, but I don't use it. I don't use it every day. Okay, there are a lot of concepts, but these three concepts, guys, that's all I use. That's all I taught to my community, and they reach, let's say, $3 million in trading in perfume trading. Okay, perfume companies, just these three concepts. So it's we keep it simple, and I will ask you guys to keep it simple, like just keep it simple because it's not complicated, to be honest. Once you understand it's not complicated, it's simple, you're gonna just wait, and you're just gonna have to wait, and opportunity will come to you. So that's that's what I trade. That's how I trade. Okay, that's how I trade. I put my I don't use indicators for the time because I don't like that. I enjoy draw my line, okay? Asian, London, pre-market, and waiting for New York Stock Exchange to do the manipulation. The manipulation will happen either at the pre-market high and low, London high and low, Asian high and low. It depends on how the structure was before the opening, or sometimes it's going to happen in the low of the day, previous daily low, previous daily high. But the manipulation will happen somewhere between these areas. So that's how I trade every day. I don't know if you have a question, but that's it. And I'm gonna show you, let's say for the last 2 or 3 weeks, we're gonna use NQU to see the opportunities. And I don't know if John, if you have something to say, if I can just keep going.
I think it would be cool if you could go over maybe a recent trade that you took. Well,
Yeah.
a winning trade, by the way. Like, I mean, if you want to talk about a loss, that's cool. But I think an example of like one of your more recent like really good trades, to show like, hey, this is the criteria that met a trading opportunity. This is where we entered. This is where the stop loss was, and this is what we were aiming for. And just some of the details on that. I think that would be good.
Yeah, so we're gonna find a lot, to be honest. And at some point, that's I don't know for you, but that at sometimes that's gonna be a problem for you because you see opportunities everywhere, and you have to like filter which one you're gonna take. So we can talk about just today, for example. Okay, like I told you, I'm just gonna draw my line. Um, Wait, okay. So I consider this area as Asia, okay, and 8 in the morning, that's the open of New York, okay, and 9:30 is there, okay. So that's Asia. That's what I consider as London. That's the pre-market, and that's New York Stock Exchange, okay. So this morning I took a trade. I short it. First my bias was too long, but I see the opportunity came and I said I'm gonna take the trade no matter what. Okay. Even though the market was trending. Okay. So um the market came. We have all of this area there. Okay. The market came and cleaned them. Okay, okay. This is the imbalance I had. I'm not wrong. I know, not this one. That was an M15 minute. Let me just use the manipulation happened exactly um there. Okay. We'll go over today's trade. So today what happened? I didn't risk I didn't put a full risk on this trade because of this equal high. That's a target for me. Okay. Whenever I have this something like that, it's a target. It's a that's where I want the market to go. But this morning I had this imbalance in M15, and I also has this down candle before this down movement. Okay, so I had this imbalance in M15. Okay, when I see it all together, let me just put a line. Okay, I had this imbalance. Okay, let's put it in black. And we had this down candle. Okay, okay. Now I have all of these three, and also the market came to um. Let's use the bar replay real quick. Okay, even though I know John doesn't like it, I don't like it either, but we're gonna use it. So now what happened this morning? So okay, at the opening of the session, the market um did this movement, but I was not trying to short here. Why? Because um the market just tapping into the imbalance and it didn't come to the down candle. I rather waiting for price to come to the down candle first. Okay. So what I've realized, a lot of stop loss that you guys having in the group chat, sometimes when we have two concepts all together, it's better when the market hit both of them to go lower or to go higher. Here, just the opening, the market does that. I'm not gonna trade. First thing first, I'm not gonna trade at the open. I'm gonna wait. I'm gonna wait for further price action. And at the same time, remember I had this pre-market low right there, and also I had this downside objective there. Okay, M5 check. Okay, I have the downside objective right there. Okay, I have the downside objective. And at the same time, remember I told you I want price to manipulate in the pre-market low, pre-market high, London low, London high. Now what I'm gonna do, I'm gonna try to find imbalance below this low. Okay, which imbalance I have below this low because like you John used to say it, offer price might go below a low at the imbalance. So we have the imbalance on this low, and we can see we had this down thing, this down candle in M15 too. Okay. So I really like to have this concept. I have above my high and below above my highs and below my lows. Okay. Now today price came and tap into the imbalance a second time and tap into this up candle. So as soon as the market does that, and where we are above the pre-market high. That was the pre-market high. Okay. That was the pre-market high. We are above the pre-market high. We came in deeper into the imbalance and we tap the down candle. So even though I have this liquidity right there, but I said if price going to this liquidity, remember the name of this liquidity is low resistance high. So the market shouldn't respect any of that. This imbalance should be inverted and this up candle should be disrespected if the market wanted to reach this liquidity. So I said, yeah, the market might want it to go there, but first it's going to give a short position. The market will drop first before to going higher. Because if market wanted to reach this liquidity area, I think somebody mentioned that this morning. What about these highs? So yeah, the market will come here, but this imbalance should be disrespected. When the market reaching for liquidity is gonna do it violently, okay, with violence and not um respected imbalance and up candle and down candle like that. So I said, okay, that's the inverted I got right there. So now when market give me everything, I'm waiting for either inverted imbalance or on the way imbalance. So whatever the market give me first, I'm gonna put my entry on it. Okay. So now the entry was there this morning. Okay. At first the entry was there, and at the close of this candle, and I said now between this inverted and this on the way imbalance, which one I trust? Okay, I say I'm not gonna try to I'm not gonna try to be hard on myself. Let's take the closer one. Which one is closer? This imbalance. So as soon as the market this candle close, I put my entry here with a 30-point stop loss. That's not a big deal. And where I'm going to this target. Okay, that was my target at first. And as I said, I have an imbalance. If the market is going to manipulate here, it's most likely gonna reach the imbalance. So even though my target was somewhere there, but I closed at the imbalance. So the market reached for it. Okay. A little bit of drawdown, that's not a big deal. And yeah, and at this point, I'm not gonna say, oh, I should leave my stop loss, my entry there. No, it's a decision you take. I just take it, and I have a reason to take it, so there is no regret at all. And the market just dropped lower. That was the trade. And at the same time, the market will give a buy scenario where we are right now. We are below the pre-market low, and the market reached the imbalance. So in this scenario, the market didn't touch the down candle. The down candle. But we had the imbalance below the low, and that's what I want to see. I want to have an imbalance below this low. And trust me, it's something you're gonna find almost every morning. Almost every morning, I have these high, these lows, and I have imbalance below them and imbalance above them. And I said, if market gonna manipulate price, the market will respect the imbalance. Now, the market just come to this imbalance, okay, and react. That was the trade. One of my trading partners take it, okay. The market comes to this imbalance, react, give one imbalance, inverted imbalance, and normal imbalance. No, now what I've done at this point, I switched to M5, okay, because I had this imbalance on M5, okay, because what's gonna happen why I changed to M5? Remember, John Fibonacci said that. I remember he said that when you have two manipulation, you have two um when market react in both ways like that, you have to pay attention to imbalance in the middle. The imbalance in the middle gonna tell you what the market gonna do next. If this manipulation will be respected for the rest of the day, the market will disrespect this imbalance and keep going higher. If the market gonna respect this manipulation for the rest of the day, the market will react um from this imbalance and keep going lower because yeah, sometimes we're gonna have this down candle that take liquidity and the market keep going lower, and we've seen that on futures on the indices. But as soon as the market inverted this imbalance, that's the only imbalance we had in between these two movement. And I said, okay, the market tap into this imbalance below my pre-market low and react, give two imbalance is M1 and create inverted imbalance in M1, and the only imbalance I had in M5 right there, the market inverted. Okay, the market is going higher. Now where the market is going to um at least this objective. Okay, like I said, this pink line, they are my objective. This the black line is where I'm waiting for manipulation. Okay, so yeah, so the market came. I didn't take this trade. Okay, I take the short, but my trading partner take the long. I didn't take the trade to be honest. And market go to the upside violent. That's what I told you. When the market is waging for liquidity, it doesn't care about imbalances and down candle, up candle. It's something that I've seen in the market after a lot of studies. And when the market reaching for liquidity, it's going that way, and it's gonna show you it wants to go there. Okay. So now, what kept my okay? What I okay? There is something that I wanted to say here. I forgot. Oh yeah, I remember John Fibonacci. John has shared a trade this week, and some people had question about it. So you remember these two lines? They represent my up candle. Okay, they represent my up candle right there. Okay, That's the up candle, which mean that was the that was an everything. Okay. Which mean it was a bearish concept. It's a concept that I use to take a short. Now, if the market disrespect this area, what's gonna happen? The market will use the same area to go higher. That's what happened here. The market cross it. Okay, you can see how the market cross it and come back to it, type it. Okay, these the two lines they represent the up candle, and the market keep going higher and higher. So that was 2 days trade. Um, a lot of opportunities, and I can go over yesterday we had some opportunity too. Same way, same thing. Um, no, not yesterday. That was before yesterday. Yesterday we had the same thing yesterday, but it was between FOMC stuff like that. I was sleeping at this time. I left the stream. I left John's stream to go sleep. I was tired. So, but we had this low right there. Okay, as soon as I had this low, which is a previous daily low, and the market came close to it and do something like that, I know I have a target. Okay, I know I have a target. Okay, that's a target right there. Now, so we're gonna have our timing, okay? We're gonna have our timing, even though it was between the afternoon session, okay? We're gonna have our timing, the London, the Asian and stuff like that. So and 9:30 was there. So yesterday morning, um, the market came at the opening. We had a divergence here, I guess, with ES, if I'm not wrong. Okay. No, we didn't have it. I'm sorry. So, but what happened in FOMC, we had this previous daily high, okay? We had this previous daily high, and above this previous daily high, we had an imbalance, okay? We had an imbalance right there. It was there, okay? We had this imbalance right there. The market came to it but didn't reach it, not even the 50%, so I can still consider it. And we also had these down candle, okay, that create this down movement, which is a bearish concept. So now during the FOMC, I wasn't in front of my chart. What happened? The market just moved to this area and drop lower, take the liquidity. So the market moved above the previous daily high, reacting to the imbalance and the up candle I had and react and move to the downside. That's basically how I trade every day. um Simple, just three concept. I just picked three concept between a lot of concept John has taught to us, and it's fine for me and I'm good with that. So I don't know if you have a question, and we can go over weeks after weeks after weeks. We're gonna find opportunity, countless opportunities, just by using these three concepts. Okay. um let's say let's go on Tuesday. I'll remember the trade on Tuesday. Okay, probably almost the same thing over and over again. So we had all of this movement as downside target. Okay, I'm gonna put the time again. I always do that, even though people say people ask me to put indicators. I don't want to do it because I enjoy doing it. I enjoy blasting this line. So now what's gonna happen? What happened? So we had an imbalance above. Um, but yeah, we have this imbalance right there. Okay, we have this imbalance right there. Okay, we have this imbalance, and in this move, we have this up candle. Okay, this concept is in John Fibonacci's book. I don't know if you bought it, but it's very powerful. This concept is very powerful, guys. So, what happened? The market opened at 9:30. Okay, the market open at 9:30, react from the pre-market low again. But I didn't want to long the pre-market low. Okay, but even though I didn't want to long the pre-market low, I can show you the imbalance we had here in M15, and also this imbalance we had here in M15. They got respected. Okay, they got respected, and I can still consider this as a down candle too. Okay, as a down candle, and inside of this imbalance, that's the only way I use M5 when I'm looking for my area. Inside of this imbalance in M5, we also have this down candle right there. So the market came to this imbalance, stop to it, and go higher. Okay, so when the market does that, I'm like, okay, the market might go bullish for the rest of the day. But again, the market did the same thing he has done today, okay, yesterday. So the market came above the pre-market high again, and we had what? We had the one, okay, the two, and the three formation. I think that's where we had the divergence. The market do a liquidity grab right there, but I didn't trust it, to be honest. At 9:30, uh, I don't really trust 9:30 move. Okay, I let it go because I need more price action. But as you can see, the market tap there, go higher. But when the market go higher, came here, it tap by my up candle. Okay, the imbalance is there, the up candle is there, the market respect it. If the market really want to go higher, this imbalance, you already touch it. The market already touched this imbalance. If it needed to go higher violently, it will just cross them. But if the market come here and do another liquidity grab, it means that my respected is imbalance and my up candle might create the downside move. So we are above a pre-market high. We are above a old high. That's what is more important for me. And yeah, that was the trade. Um, the market keep dropping for over 300 points. I only caught 100 points. Okay. Um, Nasdaq, it's gonna give you a lot. So like I said, when I have my confirmation, I'm waiting for market to create either the imbalance or the inverted. So I'm gonna draw my line right there, waiting for the inverted. But in this movement, as soon as I see this right there, that's a short. I'm gonna trust it because my variables are already there. So there is no hesitation here. Why hesitate? I don't have a reason to hesitate right there. So now the market will reach for downside liquidity, and I only had 100 point target, but as you can see, the market kept going lower and lower, and that was the trade. And just we concept. So somebody could have bought here, okay? Somebody could have bought here because we are below the pre-market low. We have this imbalance and this imbalance. And inside of this imbalance, we have the down candle in M5. Okay. The market into it. Okay. We are below the pre-market low. The market tap into it. So in M1, the market will create either an inverted imbalance or a normal imbalance. I call it on the way imbalance. So the market tap into it, it react. So as soon as the market does this, that's the entry. Why? Because I already have all of my confirmation. Okay, I have the manipulation and I have the conviction. I'm just need a reaction to go higher. So that might be the trade. Okay, that's the inverted, and the entry will be there. You'll stop here, and yeah, that's it. That's it. Market reach for over 100 points. Okay, like I said, from working backtesting study Nasdaq, I've seen that most of my move give 100 point, and I'm not saying that you gotta catch 100 point every time, but it's just to tell you that it's easy to find 100 point, and 100 point, even though it's micro, $2 a point for one contract, three contract, five contract, it's gonna give you some bread. So that was the long position, and that was the short position. And I'm not gonna say every day it's the same, but it's not rare. It's something I see every day. I have my low, I have my highs. I'm gonna have an imbalance below them, above them. plus down candle, up candle, at least M15 H1. When I don't have down candle or up candle, I might check M5. That's the only way I check. And to check the M5, I should have already have the imbalance in H1 or M15. That's how I trade basically. And I just that's how it is. It's simple. So of course, sometimes I'm gonna have the divergence, okay? Because divergence is the most powerful tool I've ever learned. So yeah, I don't know if you have a question, and yeah, that's it for today for me. I said we're gonna talk for 30 minutes, but we almost got 1 hour here.
Yeah, I've been the same way for a long time. So welcome to being an educator, right?
I'm waiting for questions. I I close the stream.
My the names are cut off and I can never tell why that is. I guess the names are too long. But someone asked, will we be having the Sunday chats here in the Discord?
Um, a Sunday chat. Um, I will think about it, but for now, it's not on the table yet. So, I have a question. You just wait for an IC, then use that imbalance as a target. Well, no, my target are always low resistance low and low resistance high. But sometimes I'm gonna have the low resistance low and below it or above it, there is an imbalance. I might put my target here. I might put my take profit here, but that's all I use to take trade. Imbalance, down up candle, and liquidity zone. Either on structure, low resistance to low resistance high. I say it like that just to make a difference for my community. When I'm talking about liquidity, I said liquidity on structure. When I'm talking about low resistance to low resistance high, and I could say liquidity on timing when I'm talking about low and high session, just to make it easy. And yeah, I'm waiting for manipulation. If I have a high, for example, and I don't have any imbalance, I'm not gonna trust the manipulation. That's just me. I don't say you have to do it like that, but I have to have the imbalance above it or below it.